Hello traders and welcome again to another trading week. This is the weekly outlook for the coming week. So we are going to analyze some trading pairs and see the kind of opportunities that we can find on the market. So let's quickly start with what's gold, and let's see what we can get from the coming week. So when we look at gold chart, normally we follow the top-down analysis procedure. So I like to start with the daily time frame to see the overall trend and everything concerning the market. So on our daily time frame, we see that we have a zone over here where market rejected from something like a support zone. So once this level is being identified, we know that either market is going to go up or market is going to what, go down. So since we are having a support zone that is preventing market, you can see that we've gotten a multiple touches from this particular level. Now we made this impulse move from here. We made this impulsive move from this particular point. We made this impulsive move, and now we've seen that market gave us what, a retracement, and also a reaction from this particular point. So from this particular idea, we know that gold is bullish. We have a support. Now we are having a retest at this particular point. So we move down to the other time frame to see a clearer what structure from that particular point. So we had a break of structure at this particular point. So market broke structure. This is the order block that markets reacted from. So this entire zone is called the order flow. So from your order flow, once you refine it, then you look for a zone or a valid order block for your trade. So this is the order block that markets reacted from last week. We analyzed it. So this is our order block. We had liquidity being taken from this particular point, or an inducement. I personally like to call it an inducement most of the time, as liquidity closer towards the order block. So now from our order block, we see that market made what we call a double reaction, or formed what, a double button on that particular order block, and we had this impulsive move. So we saw a market breaking structure from this particular zone. So all right, so we go down to maybe the 1 hour time frame. Then we look for what our point of interest is, where we can take our trade. So if we are looking at our 4 hour time frame, we can see that we have another block from this particular point. By the way, if you haven't watched our video on how to pick valid order blocks on the market, you can go and check that particular video. So from that particular the idea around the valid order block is that a valid order block must break structure, must have liquidity, or inducement, must also have an imbalance. So if we check this particular area over here, we can see that we are having a break of structure. This is our liquidity, or this point is a liquidity zone, and also we are having imbalance, and the order block below. So this becomes our point of interest for gold. this becomes our point of what interest for gold. So here is our POI that we are going to be what's waiting for markets. If market comes down to this particular zone, this becomes what our point of interest for trade. Also, we have this over here also serve as what this over here also serve as what a breaker block. So this becomes also another point of interest. But before we decide which zone that we will trade from, let's trade to the 1 hour time frame and let's see. So when we come to the 1 hour time frame, we could see that markets gave a rejection from this particular point, and what came down was before going up was for this particular zone what to also be broken. All right, so this one also becomes a valid zone, but considering these imbalances or considering the imbalance around this particular point, the second or this POI becomes a more valid zone for trade because markets can come down to fill the imbalances below before market can come down to fill the imbalance below before what's going upwards. So that is our analysis on gold. So you can decide to wait patiently. You can wait patiently for gold to get to this particular point. Then you can have your trade toward to the upside. That is the analysis on gold. So also let's check on US oil. So you know that due to the current war between US and Iran, oil has been very, very hot bullish. Oil has been very, very hot bullish. So looking at US oil from our daily time frame, we saw that market came down to what? So always from the higher time frame, we look for what direction, we look for what key levels in the markets. All right, that is how the higher time frame have always been used. So markets came down to this particular point, and then we saw this what impulsive move being what created. We had liquidity, a liquidity graph from this particular point, and also we are having what a correction market. This is what a correction phase, and we had this breaker block being retested, or this entire candle is what another block. This entire candle is what another block. But if we find, we can consider what this. So oil has retested to this particular zone. When we scale down to, or now we go down to the 4 hour time frame. If we go to the 4 hour time frame to map structures properly, so this becomes what our order block. We saw external structures being broken within this particular point. So we had a break of what structure. We had a break of what structure. So you will see that at this particular point, we had this particular order block being violated or being what broken. That is why from our market structures series, I was telling you that when we see market breaking this particular zone, this does not, or this is not a change of what character. This is not a valid or change of what character, because what controls the direction of the market is what your major structures. It is your major structures that what controls the direction of the market. So if we are looking at our daily or weekly time frame, how do we determine our major structures, or from which point do we determine our major structures? So you could see that this From this particular point, we made what this was the structure that was formed. That is what our major structure. So you could see that that particular zone was within the major what? The major structure. All right. That zone was within the major structure. So once market break that particular zone, we do not consider it as, or we do not mark that particular zone, or this doesn't becomes what? A change of what? Character. That is a liquidity that market was grabbed or market came down to take. And now market is now aligning, or market is starting to move in its original direction after reacting to the key level. So you need to understand the structure and how each and every one of it what applies. So we saw that markets came down, taking what the external what structures, and then we have reacted to a higher time frame point of interest from this particular zone, and then we are also reacting to what another zone. So considering of checking correlation with the ongoing war, we know that whenever the war keeps on escalating, oil always would react bullish. Oil always would react bullish. So within the week, if there is any form of fundamentals or there's any news that indicates or shows what a continuation of what of the war, that means oil is going to continue being what being bullish. So this zone then becomes what our point of what interest. We see that we have an order block over here. All right, this is another block. You can also call it a demand zone. That is if you are supplying demand what trader. Yes, so that becomes our point of what interest. So we wait for market to react over there, and that becomes what our zone. So you could see that we are having a hot an external structure break at this particular point. So another factor that I like to consider is what the patterns that market what is forming. So you see that from this zone, market for this particular pattern, the double what zone becomes something like what a double pattern. So if we are having, or we are coming from a support zone, market is coming from what a support zone, and we are seeing patterns that indicate what continuation, you should understand that the direction of market will be what going in that particular direction. So on oil, we are also bullish. The only thing over here is that oil, the correlation between gold and oil is what negative. When oil is what oil prices are going higher, gold what price keeps what's coming downwards. So depending on the fundamentals that will be playing or will come out within the week, all right, that will also have an impact on the analysis for this particular week. But considering our technical analysis, this is what we are also seeing on what oil. Let's check on some currency pairs and let's see as well. So let's check on GBP, or this particular pair has been quite somehow a whole lot of consolidation on that particular this particular pair. So we can see that we've been having a very, very bearish structure. All right, we are having a very, very massive downtrend. We saw this particular bullish move or impulsive move, but the still market has been down. So on our higher time frame, we look for key levels. So we have a key level around this particular zone. We had this particular structure being broken as well. So this means that this particular pair was or is actually bullish. So this is what a correction. Market is creating what a correction from this particular point. So once we switch to the other time frame, we look for confirmations. So this is our major structures. This was what our major impulsive move. If market breaks this zone, then we may have a continuation of what a bearish move. But then market has now retested, or market is now testing and retesting on that particular zone. So one thing about the higher time frame is that the major structures is that you will mostly get what your extreme point of interest from that particular zone or that particular from the major structure. So we are reacting, or market is reacting from this particular order block. Now, when we come to this particular side, where we are having what our external structures, we had this break of structure. We had a break of structure from here. We had a break of what structure from here. So before we can get what we can confirm a bullish market continuation, we need to have what we call a shift in market structure, because these all structures or all these structures are what external structures. So before we can get, or before we will get what a bullish market or a bullish what confirmation, we need to have what we call the market structure shift. Also, you can watch the video on what structural what events to understand how the structural event what works, the difference between what the market structure shift and what change of what character. So we haven't gotten any clear out confirmation. This particular market needs to what break this particular high, and if market breaks this particular high, then we can what consider Gbpaud to start going what bullish. But then if we look at this particular consolidation, or let's go, we switch down to another lower time frame. What you can see from this zone is that after this structural break, when markets retested on our what higher time frame, this is what our higher time frame point of what interest. So you can use the abbreviation higher time frame point of what higher time frame POI. So we've mitigated a higher time frame POI. Now, if we look at this particular zone, we could see that we had another block being reacted on from this particular point. And this zone was being what we had a break of structure at this particular point. Now the market opening came or brought market to react to this zone as well. So this is what we are seeing, or this is what we are having on what Gbpaud. So considering our current level, which is the higher time frame point of interest that market is reacting on, and we had another block, and we had a minor structural break within this particular what swing leg, and market is also reacting from this particular point, we can then we've seen a consolidation around this particular zone and also a liquidity. These areas as what? Liquidity. So we can expect a bias from this particular trade. But do not also forget that the external structures haven't clearly aligned with what clearly aligned with the major structures. We need to see a break of this particular point. We need to see a break of this particular zone first before we can confirm a bullish market. But that is how the market is reacting. So we can have our target at this particular zone, which is about 1:5 risk to reward ratio. That is not quite a bad trade if you apply proper risk management. So that is it on GBP odd. Also, let's see, or let's add one other trade to it. So this is GB Euro odd as well. So Euro odd and GBP odd are quite looking the same. They are all looking the same. We had this impulsive move from this particular point. Then we are having this retracement. So we are on our we are on our daily time frame. So we are having a key level. Now, one thing that you need to do is that always pay attention to price action. Always pay attention to price action. So you see that over here we've had about two rejections from that particular zone. So market has reacted to our higher time frame point of interest. We saw this bullish impulsive move from this particular point, and then we are seeing a correction or a reversal from this zone. So now we go to 4-hour time frame. We check on our external structures to see how the external structures are playing out. So we saw that external structures were bearish. External structures have been very, very bearish. We've been having a break over here, another break of structure, another break of structure at this particular point. So before we can determine, or before we will confirm that this particular trade is going to be bullish, we need to have a shift in market structure, which is going to be a break of the recent external structure. That is what will give us a confirmation that the trade is or we are now going to go bullish. Like I said, always the external structures needs to align with the major structure which controls the direction of the market. So once we see a reaction from our higher time frame point of interest, the next thing that we are going to be looking for, the next thing that you look out for is going to be the next thing that you look out for is going to be your shift in market structure, which is going to be a break in the recent or the recent previous high from the external structures. So we haven't gotten that one yet. So overall, we are just reacting to this particular zone. We can still have or we can still get a break of structure for market to continue on. in the direction. So once we see down to the lower time frame, now we have what our point of interest. We have a higher time frame point of interest over here. Also, we saw that it also reacted or rejected from this particular point, causing an internal what break of what structure, causing an internal what break of what structure. So with euro odd, currently, if we are looking for a point of interest to trade from this, or considering our checklist for a valid break of structure, we said that our valid order block must break structure also have liquidity. So we are having what liquidity. This is a liquidity. Also, if we check the wicks around this particular point, you see that these two are having these two looks more of an equal low what liquidity. Let's see it clearly. All right, so we are having an equal low what liquidity, and we are having this order block just below what that's liquidity. So this will be our point of what interest for euro odd. So the reason why we are going bullish is that market has what tap on the higher time frame point of what interest. So unless we see a violation, if not, we are expecting that we can get a market structure shift from the break of this particular point, then we can consider these zones or this particular trade to also start going bullish. So that is it for or these are some of the trades that we can look out for the upcoming week. The rest of the chart or the rest of the analysis will be posted in the Telegram group. So if you are not in the Telegram community, you can check the link in the description, and you can have access. We always post our technical analysis into the Telegram bot community. Thank you for watching this particular video, and wish you a profitable week as well.